shipping presentation. Thank you very much for taking time out of your busy day to listen to us. This is Nigel Ashfield, Managing Director of Time Investments, and I'm joined today by Stephen Daniels, the Fund Manager of Time EIS. We have a slide up on the screen now with some important information. The one thing I'd just like to point out is that we're one of the only providers that doesn't accept subscriptions without the investor receiving advice from an authorized advisor. But if you have any questions on this slide, please do let us know. Very quick slide up here, just with some information about Time Investments. We specialize in tax-efficient investment solutions, and we're very proud of being recently awarded the Best BPR Manager back in November 2015. We've got over 2,000 clients and over £500 million invested through our tax-efficient solutions to date. We've got a growing team of over 50 staff, including a distribution team of 20 and 16 experienced investment experts. We have a very strong track record of success. Our original BPR product has a 20-year track record of achieving business property relief for investors. We have 2 open-ended property funds investing in ground rents and commercial long leases. And we have significant asset-backed EIS experience with 3 successful and it was originally set up to encourage investment into early stage companies. The benefits are widely known, so I won't dwell on them, but the critical numbers there are the 30% income relief initially, the capital gains tax deferral into an EIS, potentially indefinitely, inheritance tax relief through owning EIS shares, which qualify after 2 years through the business property relief, and also the upside being tax-free from the growth. There is one more relief there at the bottom noted, loss relief, which protects the downside as well. What is clear that over the last few years, EIS has steadily increased in popularity, and that's partly been driven by the availability of asset-backed EIS opportunities, such as solar energy. Now, as you may be aware, the EIS landscape has completely changed this year, and renewable energy investments no longer qualify for EIS. And that was further reinforced by the removal of reserve power as a qualifying investment at the end of November last year. The industry has therefore been driven towards more growth-oriented, UK-based investment opportunities, more in the spirit of the original EIS legislation, but higher up the risk curve. What we do at Time Investments is focus on genuine, sound investment-based EISs, as opposed to looking to invest in areas that the government's not keen to promote, or investments that wouldn't make sense without the tax relief. Believe it or not, there are still some EISs that unashamedly could never return more than the £1 invested, and we think those type of schemes are going to come to an end in the future. So the best of all the EIS qualifying trades that we've come across in our research is in dry bulk shipping. And we haven't just suddenly come across the trade. I personally have been focused on the dry bulk shipping market as an investment for almost 15 years. But it's only now that it really is at a level where I think it makes a very suitable investment with or without the EIS tax advantages. So why shipping? Shipping industry has been an enabler of trade for thousands of years. It's a sector with few, if any, viable substitutes, and is of critical importance to the flow of global trade. Despite technological advances, the commercial operation of dry bulk vessels has remained broadly unchanged over the years, and as such, the specific risks of the sector are very well known and understood. Shipping is a cyclical industry, and with charter rates and vessel resale values directly affected by changes in global supply and demand dynamics. The present oversupply of dry bulk vessels, combined with a demand reduction caused by the slowdown in the trade of hard commodities such as iron ore, has driven down ship charter rates to around a 35-year low point. This has in turn impacted on the price of second-hand vessels, putting them now at an affordable level for a £5 million ungeared EIS investment. It is forecasted that the oversupply of vessels will reduce in the next 3 to 5 years through a combination of an increased level of scrapping of existing vessels and a dearth of new build ships being ordered. Under normal market conditions, vessels should have a useful economic life of approximately 25 years, which provides a natural scrapping cycle. However, given current market conditions, many ship owners are scrapping vessels early to avoid the requirement to fund mandatory maintenance and inspection costs. Low charter rates are also discouraging investors and ship owners from placing orders for new vessels, and in many cases buyers are cancelling orders for new vessels, even if it results in losing their multi-million-pound deposits. Investing now allows your clients to gain exposure when vessel values are depressed, putting them in a strong position to benefit from any uplift in rates caused through the contraction of the shipping fleet and/or an increase in demand from for the transportation of freight. Now, over the last 18 months, HMRC and the Treasury have implemented a number of measures which have materially reduced the available trades, including many familiar trades, which are qualifying investments for EIS and VCT. We appreciate this has been a huge frustration to advisors and clients. Now, the dry bulk sector is a non-contentious area for EIS, as there is a clear shortage of mainstream debt and equity capital from the sector in the UK, and the provision of state aid support via EIS will not distort the UK shipping sector. Furthermore, the maritime sector has been identified recently by the Department of Transport as being of vital importance to the UK economy, and one which it's keen to see grown and supported. We therefore feel that shipping is an EIS trade which is highly likely to continue to qualify under the EIS rules going forward. To ensure that risks are mitigated as far as possible, we will not be borrowing to acquire the vessel, giving our EIS companies a distinct advantage over the vast majority of ship owners, which are leveraged, and in most cases the banks actually own the assets, and they certainly don't want to be ship owners. I'm now going to hand over to Steve, who's going to talk you through a bit more about the underlying trade of ship owning and ship chartering.
Thank you, Nigel, and good morning, everyone. The slide on the screen shows some of the various classifications of vessels which are available within the dry bulk sector, ranging from a handy-size vessel, which is usually the smallest commercial vessel available in dry bulk, up to a Cape-size vessel, which is one of the larger size style of vessels available. Now, typically, the larger the vessel, the less versatile that it is. Cape-size vessels, for example, are designed to only carry the hard commodities of iron ore or coal. And this links the value of a Cape-size vessel very closely to the specific underlying commodity which it carries. And as a result, the values of these vessels are significantly more volatile than a vessel which can carry a multitude of different types of cargo. With the Handymax and Supramax style vessels that we will be targeting for acquisition within our Time EIS service, we have complete flexibility as the type of cargo we can carry. So the little chart on the bottom of the left of the screen there shows that a Handymax and Supramax vessel can carry all of the major bulks, iron ore, coal and grain, down to the minor bulks as well, including in no particular order fertilizer, forestry products and minerals, which means that if any one of those particular commodities happens to be in high demand, we can shift the focus of the vessel to transport the commodities which have the highest value and therefore will attract the highest charter rate from customers. The typical life of a vessel within the dry bulk market is typically between 20 and 25 years. And as long as a vessel has been built in a good quality shipyard, typically in Japan or Korea, then a 25-year life of a vessel is usually possible. Vessels which have been built in less high quality shipyards, generally in China in the past, tend to have higher maintenance costs throughout their useful life and have a shorter useful life in total. Our asset manager for our shipping trade is a company called British Marine, and British Marine will tend to maximize the buying power of our EIS to enable us to buy the youngest, most efficient, best built vessel available within the confines of the £5 million sterling EIS funding limit per company. Within the Handymax and Supramax sector, there are at least a dozen of the vessels sold every month in what is a truly global market. So vessels may be sold in Japan to a buyer that's domiciled in Bermuda, which is operating within the Mediterranean. Once we've selected a short list of ships to acquire, we will have each vessel inspected by a specialist third-party consultancy company, and they'll also be valued by a third-party valuer to make sure that we're paying a fair price for the vessel. In addition, the Time Investment Committee will oversee and scrutinise any acquisition opportunities which are presented by our asset manager. In addition to the investment committee, we will also seek guidance from the experts that we have appointed on our Shipping Independent Advisory Committee. Turning now to the commercial operation of a dry bulk vessel, I'd first like to talk about the way in which ship owners generate revenue through the chartering of their vessels to customers. Chartering contracts are typically the only revenue stream available to a ship owner, and they're paid in the shipping currency, which is the US dollar. Chartering contracts are arranged for the transportation of cargo from one port to another, and chartering is typically arranged either on a spot basis or a time charter basis. Spot charters are usually arranged on a voyage-by-voyage basis, and they generally provide a higher daily revenue, but of course give less certainty on the employment of the vessel, as when the spot charter ends, the charter manager of the vessel owner will then have to find another charter immediately following it. Time charters, as the name suggests, offer charters for a fixed period of time and will generally provide full employment of the vessel over a fixed period of time, but they tend to come at a discount to the spot charter rate. So the vessel owner is sacrificing some daily revenue for an almost guaranteed 100% employment rate. The EIS legislation stipulates that a time charter cannot be for more than 12 months, so it wouldn't be possible for us to acquire a vessel and charter it for the full 3-year EIS trading period. Instead, we will be operating within either the spot charter market or for time charters of up to 12 months. Charter rates and vessel asset values are almost perfectly correlated. The chart on the screen there shows the change in 1-year time charter rates for a 52,000 deadweight tonnage bulk carrier versus the 15-year-old second-hand price for approximately the same vessel size. And as you can see, there is almost perfect correlation between the two lines. There was a strong growth in rates, charter rates that being, between 2002 and 2006, with a significant spike in rates being observed between the periods from 2007 to 2008. We're not expecting this cycle to be repeated in the near future because that represented both the huge explosion in global commodities demand and also an abundance of bank liquidity which was available at the time. However, even excluding that spike, it's clear that rates are at a particularly low point, as can be seen from the right-hand side of the graph. The Baltic Dry Index is the global indice which measures the dry bulk charter rates. It's compiled here in London, where we're presenting from today, and it provides an average of global rates across a number of different, very common charter routes, so routes between certain ports. The Baltic Dry Index reached an all-time low in February 2016. And whilst there's no guarantee that charter rates will rise in the short term, it's highly likely and widely forecast that we'll see a material increase from the current low levels within our expected time horizon of 3 to 5 years. Because charter rates are so low at the present time, the vast majority of ship owners who use bank debt are currently in distress, as the charter revenues they're receiving aren't sufficient for them to meet both their vessel's operating costs and enabling them to service their bank debt at the same time. This is forcing a number of well-known and large shipping companies into an insolvency position. And towards Q3, Q4 of last year, 2015, a number of major shipping companies, including, for example, the Japanese shipper Daiichi Chow, became insolvent. The effect of this is to increase the number of second-hand vessels which are coming to the market, which are further depressing the second-hand value of ships. On the demand side of ship chartering, despite the much publicized slowdown in China's economic growth, worldwide demand for the shipping of seaborne transport of goods has remained relatively constant and is actually increasing on a year-by-year basis. Seaborne trade is still estimated to double over the next 15 years. So whilst a recovery in both hard and soft commodities should benefit charter rates, there will still be an expected natural growth in trade, which will fuel an increase in rates. In addition to a demand side increase, we're also expecting to see a reduction in the supply of existing dry bulk vessels. As I mentioned earlier, dry bulk vessels will have a typical useful life of around 25 years, which provides a natural scrappage cycle when vessels reach the end of their life and are sold to ship brokers and breakers to be scrapped and sold on the scrap steel market. With hardly any, almost none at all, new orders for dry bulk vessels being placed, given the very low charter rates at the present time, and a natural increase in the scrappage cycle as owners are struggling to meet their bank debt requirements and also their operating costs, we expect there to be a reduction in the global shipping supply over the next coming quarters, which will help to restore the supply and demand imbalance, helping to cause a recovery in charter rates, irrespective of whether there's actually an increase in seaborne trade and demand. Having covered off the revenue side of ship ownership, it's now important to look at the costs and responsibilities a vessel owner has. The largest expense of running a dry bulk vessel is the employment and the subsistence of the crew. A dry bulk vessel in the Supramax and the Handymax class will have between 20 and 22 crew members on board at any one time who operate the ship and own mechanical and electrical components. Of the 20 to 22 crew members, there will be, of course, the captain and the chief engineer. Each vessel that is acquired through an EIS company will be typically flagged and registered under the UK tonnage tax system. And as a requirement of the tonnage tax regime, 2 UK cadets will be trained on the vessel from time to time, preparing them for their life in the merchant navy and ultimately one day hopefully becoming captains or chief engineers in their own right. A benefit to the ship owner, including the EIS company, of the tonnage tax system is that any gains or profits made on the trade of ship ownership will be free from UK corporation tax. Instead of paying corporation tax at the forthcoming rates of 19%, instead a low flat rate tax, typically around 6,000 sterling per annum, will be payable, irrespective of the size of the profit that's actually made, which makes an EIS shipping investment a very, very tax-efficient investment for clients. The EIS company itself will pay a minimum, almost negligible amount of tax on the gains and profits it makes, and of course upon liquidation and realization of the investment, there would ordinarily be no capital gains tax payable in the hands of the investors. Other costs of ship ownership include of course marine insurance, which is a very fundamental part of the trade of ship ownership to protect against the various perils of which a vessel will be exposed to when it's employed on a chartering contract. The marine insurance market is probably the most established insurance market in the world, and the London Financial Centre of the Lloyd's of London building, of course, is the heart of the marine insurance industry worldwide. Perils which are covered by marine insurance include storm damage, piracy, and other more unusual risks such as striking bridges or hitting icebergs. Running repairs are conducted to the vessel and her engines during the normal course of operations, with dry dock surveys being required every 2.5 years. And this ensures that the vessel remains in a seagoing condition and isn't therefore likely to suffer loss at sea or cause any form of environmental pollution. One aspect which is very important to note is that the cost of fueling the vessel on the charter contracts will be the responsibility of the charter customer, not the vessel owner or the EIS company. And that means that should there be a huge rise in oil prices in the foreseeable future, that won't affect the profitability of operating the ship. All operating costs are typically paid in US dollars, which is of course the global shipping currency. So both the revenues and the costs of running a vessel are paid in the same currency, preventing therefore the need to have any short-term hedging in place to make sure that a rise in the US dollar rate doesn't necessarily generate a higher cost of operating the vessel. Turning now to our asset manager, we have selected the British Marine Group to provide asset management and technical and commercial management services to our EIS companies. Founded in 1999, the British Marine Group was originally a series of EIS shipping companies, which means that the principals of the group are very familiar and knowledgeable about the EIS rules and regulations and how to successfully buy and sell dry bulk vessels within the confines of the rules. The British Marine Group are one of the UK's only registered vessel owners and operators, but they also have overseas offices in Mumbai and Singapore. British Marine own directly a fleet of 6 Handymax and Supramax size vessels, which, as I mentioned earlier, are the types of vessels that we're looking to acquire through Time EIS. The group operates a commercial platform, which arranges the chartering of the vessels, and a technical management platform, which arranges and oversees the crew, the insurance, and all repairs and maintenance. In addition to the 6 vessels that British Marine own outright, their management platforms also have contracts to operate a further 7 bulk carriers, plus the vessels which we're seeking to acquire through Time EIS. As previously mentioned by Nigel, the risk profile of EISs and of both this shipping variety and other EISs in the market will be considerably higher than those that have been available in recent years, specifically those that have been in the renewable energy sector. So we believe that all future EIS investments should be considered as being genuinely high risk and are unlikely to provide a high level of capital preservation for those who are seeking a low volatility asset-backed investment. So where possible, we've taken steps to mitigate the known risks of an investment in the dry bulk shipping sector. And given the age and the longevity of the sector, a number of those risks are very predictable and relatively easy to mitigate. For example, we will be purchasing each vessel without the usage of debt finance. This means that we won't be beholden to banks for meeting interest cover and valuation covenants, and we won't be required to service interest in principal out of operating cash flow in times when the charter rate is suppressed. The vessels we acquire will retain a resale value, either on a going concern basis, or in the event the shipping market continues to decline, they will have a secondary value as scrap metal. The value of the scrap in the ship will be dependent on the future metal prices, but at current market values, this represents around 30 to 40p per pound of value in the ship, which combined with the 30p of income tax relief, which is available up front on an EIS investment, plus the EIS loss relief, means that the downside should be limited to around a 20p loss per £1 investment. And of course, with EIS, any loss can be set against the investor's income tax, which could be anything from a 20 to a 45% benefit. Subject to market conditions, we will agree longer-term 12-month charters to provide a predictable revenue stream, full employment, but albeit at a slightly lower daily rate. We'll also utilize a medium to long-term hedging strategy to minimize the risk of a fall in the US dollar to UK pound sterling exchange rate over the lifetime of the EIS investment. We're partnered with British Marine, who are an established operator of both dry bulk vessels in the UK and abroad, but also experienced in the EIS rules and regulations. And finally, but by no means leastly, we will have input and oversight from our independent advisory committee. And each of the three members of the IAC, whose photographs are on the screen there, have particular competencies in one area of ship ownership or operation. Alan Marsh, for example, is the founder and former chief exec of the Braemar Group, which is an LSE-listed ship advisory and maritime business. Alan has particular expertise in the sale and purchase of vessels and will be advising us on the vessels that we seek to acquire and also at the timing of our exit point and realization for the EIS investment. Guy Platten is the Chief Executive of the UK Chamber of Shipping and is an expert, therefore, on all regulatory and technical matters regarding vessel ownership. And finally, Jim Everson is the former MD and Head of Shipping at EDF Man Shipping Limited, who is an expert on chartering and will be providing guidance on our chartering strategy. That concludes my section regarding the ownership and operation of vessels, so I'll hand back to Nigel to summarise our Time EIS service.
Thank you very much, Steve. Really the key points to bring out, most of them are on the screen. One that's not on there is just that Time EIS does support initial and 4 years of ongoing advisor charging. We're raising £20 million to invest in the acquisition and operation of dry bulk ships using the EIS. We're raising it in 4 tranches of £5 million consecutively, and each tranche will buy 1 vessel, and that without the use of debt, and then we'll be trading it over the following 3 to 5 years before selling the vessel and exiting. So if you like, it is a planned exit EIS. We have received HMRC advance assurance that the 4 companies will qualify for EIS, and indeed have support from the Department of Transport, UK Chamber of Shipping. We think that this is a trade that will become more common in the next tax year as other providers understand it and support the scale that it offers. Just tackling the base case return there, just to put some context to it. There's lots more information in our deal sheet that we can send you a copy of, but in order for us to achieve that base case of £1.27 for each 70 pence invested, including the initial tax relief, so that's almost 60p return. Ultimately, we're expecting in our model the shipping charter rates to return to $15,000 a day within 4 years. Now, the independent forecasters are actually expecting to get to just slightly higher than that rate in 3 years, but we're being a little bit more conservative and saying we'd expect it to take 4 years to get to that sort of level. And of course, for every dollar that the charter rates go higher than that will increase the potential return. Our medium case return, target return is £1.61, and that ultimately the charter rates would need to get to $17,500 a day, and for our sort of high case expectation, which is based off $20,000 a day, that would return to £1.94. Now, all of those figures are stated after tax and after all fees from us and from British Marine. So it really is a true investment opportunity, and it's not something just designed to take advantage of the tax breaks. Anecdotally, this year, some of the world's smartest ship-owning families, mainly of Greek or Norwegian descent, have publicly come back into the market, so calling time on the market. And what they'll be doing is obviously they'll be coming in without the benefit of all those tax reliefs. So here we've got a base case potential of £1.27, which what we're targeting, and that's from the 70p net investment. Last point I'd like to make on this slide is that the tax-efficient investment market is starting to become a lot more transparent, and we think that's long overdue. With Time EIS, after the costs of the EIS company are covered, there's just the initial fee to us of 3%, and our performance fee, which kicks in if we deliver a return of over £1.5. In order that our asset manager is equally incentivized, we're sharing that performance fee equally with them. There are no transaction fees, no arrangement fees, no underlying fees, no rebates from the underlying manager, and no equity or other interest in them either. Because of the higher risk of this EIS, we feel that this is an appropriate alignment of interests, but also shows our belief in the investment. We appreciate that this is a new sector for most advisors and their clients, so we've worked hard to prepare thorough documentation to provide you with the detail you need. The pack on screen that we can send you either by email or in hard copy comprises a plain English EIS brochure, a detailed 8-page shipping deal sheet, and an easy-to-use application pack. We'd be happy to supply these either electronically or, as I say, with hard copies. Now, when it comes to due diligence, there's a multitude of shipping data available, as this is such a long-standing industry. But in order to make your life as easy as possible, we have commissioned an independent third-party intelligent partnership to distill all the key information into a single, thorough industry report. Again, it's available in soft copy, and we have some very nicely printed hard copies, which we can send you. Reading the report also gives 2 hours of structured CPD. Obviously, in our market, there are 2 independent reviewers who are well known, and one other group who are just joining. Obviously, everybody knows, most people know about Martin Churchill and his tax efficient review. He's rated the time EIS shipping with an 85, very high rating. And Allenbridge, over on the right-hand side of the page, have currently rated us the highest amongst the non-generalist EIS providers. These very, very useful and highly detailed reports provided by independent experts in the field are available for you should you require them. We also have further due diligence information that is available. We have a nationwide team of business development managers and a technical support team in our offices in London, and we're available whenever you need to provide support to you in understanding not just EIS but business property relief and other tax efficient investment solutions. And please do call us if you have any further questions. But without further ado, I'd just like to thank you for taking the time to listen, and very much look forward to speaking to you if you have any questions, and thank you for your time.